Hi back. This is part two of the video on from Friday, the 12th of March, of the price action corner with Gigi or theboringtrader.com. We left on the first part of the video with a more serious attempt from the bears to break this, to assault this trench line of the bulls, and it looks like they are breaching it. I suspect that there's probably going to be quite a lot of orders, breakout orders at this sort of level, this sort of area. Tension has been mounting here, and if the market will start tanking, actually, there's quite a lot of space to go. It's probably this little area here to test, but after that the next one is really the big round number down here. So there's quite a lot to gain, but at the same time, when you have situation like this, there could well be, especially if the volume has gone down quite a lot, there could well be the formation of a trap. Let's see what happens here. As you can see, the trap is set, if it is a trap, and it looks like it's a trap, because you would expect that after a bit of penetration here, really the bear should take control and push back. If I was long here, short here, I would probably start reviewing my position and probably trying to get out as soon as possible and reposition down here. The bears are trying, but they're not very convincing, and this bar here is telling me quite a lot why the bears are still fighting on this trench when they actually managed to breach it, and why the volume is going down. So I think that this is a false breakout. Again, nothing happening, and I would be out if I entered, but I wouldn't have entered on this position. The best possible thing to do would be to see this, to have a breach of this, to have the market going back up here, especially if it goes up here, to flush out all the people who were caught short here, and then come back in later on. But at the moment, there's nothing I like, and so I'll stay out. Okay, this is very interesting. As you can see, there was no momentum here, and the bears after this have been exhausted. This is quite typically called an exhaustion bar. Usually the volume should be a little bit higher. But you see this formation here, with especially this kind of reaction, means that the bears are exhausted, and they want to retrench themselves, probably here or at the big round number. Notice also something else. This sequence of green bars is quite interesting, because all the bars you had before, they were an alternation of red and green. This shows momentum a little bit, but shows definitely more momentum than before, with volume just getting higher a bit. Some people will start looking at this and say, probably it's a good idea to check if we have something to do with this trend line here, and the idea is to see how much longer it goes. If it breaks the trend line on the down after having tested, especially these 2 points here, there's a moving average coming in here. I think it will be a good chance for a scalp. Okay. And in fact, it went down. I don't like this formation, however, because I like the more classical kind of thing. What I would have liked is to see a real test of this big round number with the moving average, a little break of this trend line, and then a reaction from the bulls, and then the bears doing this. The bears have done that before that confirmation that I would have been looking for, so I would have probably missed this one. But as you can see, the range is still intact. The bulls haven't managed to test the big round number here, and the bears keep on testing this level down here. What happens now is that the bulls have exhausted themselves, and the bears are doing what the bulls have done before. This is another sequence, but of bars, candles, but they're all red. So the bears are obviously in control. What I don't particularly like about this is that all these candles have wicks. So it is a control that is not particularly strong. And once again, the market reaches this point, and we really need to see what is the reaction from the bulls here. And in this case, they've gone down. So this is another breach. This is a more forceful breach, and probably quite a lot of people would have gone short here. In fact, the volume is slightly higher. Would have gone short here. Is this another trap? In days like this where you don't have news and so on, it might be. Especially because this is a pretty long series of bear bars without any reaction from the bulls. When are the bulls reacting? Because this is basically their trench line, and they reacted here quite forcefully before. Where are they? Well, they're here. And now you can do the opposite of what you've done here, especially if you're a contrarian. You just look at this trend line, and it's broken. Maybe the bulls will do what the bears have done, and there's nothing you can do. Or the bears are going to try to go back again, and the bulls will restart from here, which is a more classic breaking of trend lines. This is more like it. This is more like it. Now, if you're a contrarian, you probably would like to go long here. There's the break of the trend line, a retesting of the trend line, and if the market goes up again, you might want to go up. But you don't really want to go long at this level here. This is a very dangerous level to go long, as we have seen. And even a scalp will be difficult because now the moving average is closer. On the other hand, we haven't forgotten that there are quite a lot of people short here. So what's the situation with the short? Pretty dire. Pretty dire. So as we said, some people made a gun short here, and now are in a difficult situation. Also because the stop for this short here probably is here, but it's a very dangerous place. Probably is here, slightly safer, but perhaps it's up here, which is the safest place to put that stop. But it's quite far away, it's 50 points away. So when you have a situation like this, you tried a breakout and it didn't work, so you actually had the chance to get out at some point at break even. Now you're probably short here, and if you have a situation like this, all you're thinking about is how do I get out? And And now you're really in a bad situation because this moving average has been broken. Next stop is this one, unless the bears react. The bears do react, and they're going down here. But you see that yet again, there is nothing here. There is still this range with two false breakouts. And in a market like this, especially after all this time, and especially at this time of the day, we're talking about 11, 12 o'clock London time, not much happens. You should really, really stay out. Now it's the time. Notice that the bulls haven't managed to test this level here. And notice that you probably are still short here. If you were short here and didn't get out with a small loss. What you do here is actually spending an hour agonizing on looking at the market going against you. And we are getting more and more into the 1 o'clock, 1:30, and especially 2:30 when the US market will open. What you do, well, if you have been agonizing a little bit too much, you can be, well, on one side you can be happier that your stop has not been hit and you placed it in a good place. On the other hand, you can see here that there is a double bottom here at this particular level. If you were hoping to get out at break even, probably you should start abandoning your hopes and try to get out with half an hour of loss. Every time it goes closer, you have a chance to get out slightly cheaper. Again, if I were not out yet, and I would have entered probably at about 54, at about 62, 63, less than 10 points after these kind of things where I risked 50 points, I'll be happy to stay out. And again, don't wait too long, because there you go. The market can do very strange things. And now you are 2:30, and the market could go down as well as up. You don't know what's going to happen. It's following the US indices. You see the volume here. And so you should have really gone out before this. Everything else is really gambling. Now we have something new. The new thing is that the US market is open, there are new orders coming in, and the DAX is following the US indices. So from this point of view, we are in a new area. Will the bulls manage at last to get through 14,500, or will the bears have more ammunition to start going down here again and break on the down? It's a very bullish opening, and at this point the US allies for the bulls have arrived, and they're pushing the market up. Let's see if this area here will hold. It does. But also the 14,500 level does. Will I go long here? Well, it's Friday afternoon, it's 3 o'clock, past 3 o'clock, there is this big bulk here. I wouldn't do anything. But you'll be excused if, especially if you lost a bit here, you would like to have some money back. And this is really very, very difficult, because at this point you're really gambling again. And instead of losing, 10 points, the risk is you're going to make them up. Yes, fine. But the risk is that you're going to lose much more if you're reckless. And as you can see, if you entered at this level here, without watching this trend line here, you will be in a very unpleasant situation now. Market goes down. Let's see if it tests this moving average here. It kind of does, but at this point is 4 o'clock, and this is when things go quiet. So I will stop here because I've already gone through too much. But this was a day where probably not doing anything would have saved us some money. And try to push our views one way or the other would have been quite detrimental. Hope it was useful. Thank you very much. You know where to find me if you have questions. Bye.